story I hear, I say, yaar, ye kaise ho sakta hai, boss? And, this is like Atal Bihari Vajpayee was explained how India will become a superpower by one minister of that government. And he said, we made a lot of presentations. And then at the end of it, the Prime Minister asked, पर ये सब होगा कैसे? So, मैं भी ऐसे ही पूछता हूँ, यार तो होगा कैसे यार कि तुम आज ये 2 टैक्सी लाओगे, कल को 500 टैक्सी, उसके बाद 5 लाख टैक्सी, मतलब थोड़ी अजीब सी बात लगती है. So, I am a skeptical person by nature, and especially startups I find hard to digest. So, but I still want to make the VC returns, right? So my method focuses on the listed market where you can hopefully make something similar to VC kind of returns. But it takes a lot of guts, takes a lot of conviction. It's very scary. Trust me, I do a lot of that. But above all, it requires a lot of deep thinking, a lot of data. It requires a lot of understanding of psychology. What is the market thinking about this stock? Trying to read the mind of the market. So that also takes up a reasonable part of the time engaged in picking up stocks that give you VC returns. I'm going to give you some case studies that First Global did over the last many years. I'll pick up some of the most prominent ones. Amazon is a company which if you see the date, it is February 8, 2001. That was our strong buy on Amazon at $15. And the title of the report was The Truth About Amazon's Liquidity. I'll come into that, what I meant by that in a bit. Okay. The next one that we are particularly proud of is Apple. That was at a price of $19. The market cap was only $6.7 billion. Net of cash, the market cap was $3 billion. That was in 2001. The market cap was less than Infosys Technologies back then, by the way. Okay. And then coming to a stock in India, in IndusInd Bank, we were the first in the industry to have identified it at a price of 46 rupees, which was about the book value of the company. The market cap of the company then was 1,400 crores, which is about 2 quarters of profit now for this company. So now, what were the common threads running through these calls? What led us to think that these stocks could potentially deliver VC type returns in the listed market? Well, here is our method. First of all, the stock must be at multi-year lows. That is our first mantra. So there is one end of our thinking, which is the momentum part. But we look at negative momentum there, where a stock has had negative momentum for years. I'm not talking months, years. Years is what we want. Okay. So that is mantra number 1. The stock should be preferably loss or near loss making. Okay, so we don't like profitable companies. And the good thing about investing is, there is Bharat's method. And the good thing again about Bharat is that he's been consistent with that method for the last 20-25 years that I have known him. He has not wavered from that method of buying quality companies at a reasonable price. And we have never wavered from our method of buying trash companies at an even cheaper price. So, we need to be consistent. So as Ramdev said, you need to have patience, you need to be consistent, no matter what your method is. Okay, and there are different paths to heaven. So there is no one path. That's the encouraging part about this business of investing. Okay, let's come to the mantra number 4. Within its own industry, the weight that this stock occupies should be at the lowest ever level. Now this is very important, as what Ramdev very correctly said, that the index is a game of manipulation, wherein overhyped companies because of high market caps make their way into it, and the companies which have actually slid in terms of market cap are removed from it. Usually you will find that those are the tops and the bottoms for most of those stocks. I remember in 99-2000 they included 4 tech companies. So Z, Infosys, Wipro and Satyam made their way into the Sensex, and those were pretty much the top of the tech market for probably a decade. So, it is a game of bad selection, but that is the way the indexes work. So we look at it in the reverse, that we are looking at a company which has the lowest weight it has ever occupied in its own sector. And if you see in retail, Amazon was its all-time low weight. Apple in the hardware industry was, and IndusInd Bank didn't even, wasn't even in the reckoning as a meaningful bank back then. Okay. Fourth point is that with all the first three being in place, watch for just one spark. Okay, it could be anything. It could be a launch of the iPod, which is what the trigger for Apple was. It could be, the Tata Motors new JLR launch. I didn't include Tata Motors. We've spoken about it. I've spoken about it many, many times. That was the spark that when I saw the cars, I thought that these cars are enough for it to get X market share from a very low base. And hopefully then if they get their market share, the number that I came up with was $500 million of profit. So it was a big swing from $1 billion loss to a $500 million profit. So you needed that one spark. I saw that spark. Management change in IndusInd Bank. Cash flow turnaround in Amazon. Okay, so stock all-time lows. There is some spark that comes through. You have the makings of a real, absolute, out of the park 6. So let's dig a bit deeper here. In Amazon, the other thing we'll also look for, which I have not mentioned, is especially for well-covered stocks, that what is the sell side saying? And if almost all are negative, that is usually a big positive as far as our thinking goes. So, that's point number 5. In Amazon, Mary Meeker, who had been Morgan Stanley's analyst at that point, was a big cheerleader for the internet sector. She released a report saying, I'm throwing in the towel on Amazon. Okay? And that, when I read that, I said, boss, idhar kuch hone wala hai, dekho. Because usually that is the bottom of the market for a particular stock. When we did the numbers, we found that Amazon had turned free cash positive in that very quarter when the lead analyst for that stock is saying this company is going to go bust. We did the math and we saw that the company had made $139 million in free cash in that quarter. For a company going bust, $139 million of free cash is telling me that somebody's math is wrong here. Okay? So I asked my analyst that if you're not right on this, I'm going to kill you. So he said, okay, boss, now let's do this. Let's get onto a call with Amazon. So we got onto a call with Amazon, with Jeff Bezos and with his CFO. And we said that don't tell us anything forward-looking. Just tell us, confirm this number to us, that is our math correct or not? And they said, yes, your math is correct. And that was enough. That was enough for us to know that we are onto something very, very big here. The bankruptcy risk which was weighing Amazon down was gone. And the beginnings of a big trade was born. Apple launched the iPod, and as I mentioned, the market cap net of cash was just $3 billion, less than Infosys. Our back of the envelope calculation showed that based on the figures for Sony Walkman, because iPod was nothing but Sony Walkman with a hard drive, correct? It could be a reasonable hit. So we did kind of a broad proxy analysis, came up with this number. We told us that Apple, by the way, it's very interesting to note, this is 2001. Steve Jobs came back after Pixar, I think in 96 or 97. And the stock was at all-time lows 5 years after he had come. So he wasn't a magician. He was struggling. Apple was in a loss. At that point in July 2001, October 2001, Apple was a loss-making company. 5 years after Steve Jobs had come back. So it's not that people can walk on water. When we say great management, great is always known in hindsight. At that point, he was the worst management in the entire hardware industry. Okay. IndusInd Bank, as I mentioned, trading at near book value. Of the private sector banks, it was by far the cheapest. It met the test, and then, of course, they had a management change. The risk reward was terrific at 46 rupees. The book value, I think, was 40 rupees. And I said, with the new management, they can't screw up at all compared to what the previous management had done. So even if they do a little bit of a good thing, and the sector was attractive, it still is, because it's a limited competition sector. Banking licenses are not doled out like broking licenses. So within an overall good sector, you found a good stock at an amazingly cheap valuation. So it was the making of a good trade.